All key indicators are showing that a gold super cycle is about to commence, and I'm going to share those with you in today's video and tell you why you cannot miss out on this opportunity. How's it going, guys? Ryan here and welcome back to another investing video, and today we are talking about the gold price and specifically why gold is about to run right now in 2021 and see a potential super cycle, which basically means the price of gold is going to go absolutely parabolic and hit all-time highs. But before we get into that, guys, please remember to give this video a thumbs up. It helps me out so much with the YouTube algorithm, and subscribe for more investing, stock market and wealth management content. We've also started covering cryptos as well, so if you're interested in that, please jump on the channel and subscribe. I'd love to know your thoughts down in the comment section below on whether gold is going to start going through a super cycle based on these key factors. Are you in it? Are you thinking about getting in it? Let us know in the comment section below. And without further ado, let's get straight into today's video. In August of 2020, the price of gold peaked at 2,070 US dollars, which is the highest it has ever hit. And this is largely due to the COVID-19 situation, where people were becoming fearful and panicking on where to put their money. So one of the safe havens is gold. But since that peak, what we've seen is a gradual decline over the period of 6 to 12 months. But we are now about to see a reversal, and there is a number of key technical indicators and key fundamental indicators that are showing this will occur. So first things first, I want to show you a key reversal indicator on the computer where it shows the price of gold is going to change direction, and in fact just had started. So let's jump straight into the computer and have a look. So what we're looking at here is the daily gold price, and as of today we're recording this on the 19th of April 2021, and the price of gold, as you can see, had peaked back in August of 2020, hitting up here just at $2,070, which is a large amount. Now, as you can see, a decline has occurred, and we can zoom in and see exactly what's happening here. Now, notably, it's clear that we've seen a few peaks where it's tried to break out, but these have just completely failed. One's occurred here, and the second occurred at this point. Now, how do we know based on this chart that the price of gold is reversing? Well, what we need to do is effectively come down to the bottom here, and what we can see is a number of key factors. The first of which is a double bottom has occurred. So let me just lay out a line for you guys here to show the support point, and if we take this back, we can see it is a historical support level which the price of gold has rested at. We can see over here it has had quite a bit of price action and has been used as both resistance and support previously. But if we zoom back in here, what we can also see is we've hit this point twice. So not only are we effectively seeing the price hit that point, we're seeing it bounce off that point, which is the most important factor here. And once again, I'm going to put another line here, because this indicates the next point of a lot of price action occurring, a lot of resistance. So first things first, let's take a good look at this. I'm going to grab the paintbrush just to indicate effectively this is where the first bounce has occurred, and this is where the second bounce has occurred. Now this, as I mentioned, is called a double bottom. And what a double bottom is a price reversal pattern. It is very common. The only thing more significant of this would be a triple bottom, where the price bounces off the support point 3 times. Now, as we can see, the double bottom occurred. This had not really previously occurred anywhere else, but it happened in quite a short, succinct period of time, from roughly the early portion of March through to the end of March. And what we saw as a result of that was an increase in the price, and it bounced straight back to this point here. Now this point, as I mentioned, is the resistance point, and we saw it tried to break through that. It failed, came back under, and now it's broken back through. And what this is effectively indicating to us is the value or the price of gold has changed its trajectory. And I'm putting this line in here. This is effectively the new trend line that has been established. And what this indicates is, in theory, we should now see an increase in the value of the gold price, and the price has reversed. This effective close up here was confirmation that a reversal had occurred, and we can see that the price of gold has consecutively closed above this point 3 days in a row. Effectively, this is confirmation that a reversal in the gold price has occurred, and we're going to see the start of a new uptrend in the gold price. From a technical analysis perspective, looking at that double bottom and the confirmation that had occurred after it, where the price eventually closed multiple occasions above the previous resistance line, now becoming support, has shown us that the price of gold from a TA charting perspective is going to reverse. But furthermore, we have fundamental backing, which I'm going to share with you now to indicate that this is actually the case. The first piece of information that I'd like to share with you from a fundamental perspective is the amount of US dollars in circulation. As you can see, this graph is showing from 2002 into 2021. And what we can see is, on a typical year, there is a relatively static increase in the amount of currency in circulation and the amount of money being printed by the US Federal Reserve. But what we can see is that throughout 2020 and moving into 2021, there has been a sharp increase in the amount of money printed, and this is caused obviously by the COVID-19 pandemic. But what does this actually mean? Well, effectively it means that the value of money is decreasing because there's more of it in circulation. That means investors will need to hedge their bets elsewhere. They can't keep saving money. They'll need to put it in something that is more stable. And gold is the typical hedge for people to put their money in. As a result, the value of the dollar is decreasing, but we are likely going to see an increase in the value of gold due to this. Next, I want to touch on Bitcoin. And the reason I want to touch on Bitcoin is it is one of the hottest assets to get into at the moment. But what we can see here is effectively a rising wedge pattern. And a rising wedge pattern indicates that the price is going to move either in an upwards or downwards direction. Unfortunately, in this scenario, it is a downwards direction. And we've seen that that bottom support line has just been broken right here. I'll circle that one so you can see it quite clearly. We can see that support line has been broken, and it broke drastically. Obviously what you saw is as soon as that support line was broken, a dump occurred, but fortunately there was a bounce back. But here's my theory when it comes to looking at gold when we're comparing this. Bitcoin is obviously being compared to gold as a better asset to invest in, because typically people are hedging their money in gold, but now a lot of people are actually hedging their money in Bitcoin. And coinciding to the current increase on the price of gold we saw previously, this drop on Bitcoin has occurred. And as a result, what I'm expecting to see is a lot of people panicking, because from a technical perspective, the price has dropped, and obviously from a literal numerical perspective, the price has dropped significantly in literally a day. As a result, people are going to panic. It's inevitable. Whether it's the right thing to do or the wrong thing to do, I don't know. Personally, I still hold my Bitcoin. But what's going to happen is this money will need to move elsewhere, because we are talking literally hundreds of billions of dollars in this sort of situation. So where else could someone hedge their money if they think the value of their current asset, Bitcoin, is going to continue to drop? Well, the logical answer is gold. So effectively, Bitcoin losing value so quickly and so volatile means people are going to look for something more stable, more safe, because a lot of people can't stomach the cryptocurrency market and can't deal with these increases and decreases that happen at such speed. Now, as you're all aware, I'm an Australian, so I want to take an Australian spin on this as well. What you're looking at here is the XJO, better known as the S&P ASX 200 index, and effectively this is the likes of the Dow Jones, but for Australia. It is the Australian top 200 stocks weighted average. And what we're seeing here once again is that rising wedge pattern. And what this is indicating is if we see a drop, which will likely occur in the coming few weeks, if it is going to occur, is if we see the price hit that bottom support line, this one right here. So let's say it hits here, the support line, bang, the price. What we are going to see then is quite a severe drop in the price, much like we just saw on the Bitcoin chart. So you're going to see it's going to drop, it's going to then plummet through, I don't know what level, I'm going to guess the support point, which is probably about here to be fair. Likely then we're going to see a bounce and hopefully a recovery, but if not a recovery, we're going to see it continue to drop. Once again, we are going to see an increase in the value of gold as a result. If your stocks are going poorly, where are you going to put your money? Gold. That is always the hedge from a historical point of view. If Bitcoin's dropping, you don't really have that option. So effectively you want to be putting your money in something that is A, going up in price, and B, is relatively stable when you're trying to hedge your money and safeguard it. So naturally the place for people to put their money when these sort of circumstances occur is going to be into the gold market. Regardless of that, even if this does not drop, the way the gold price is still going indicates that the price of gold is going to keep rising no matter what. One final aspect I really would like to touch on, and that is the valuation of stocks in general. The value of stocks at the moment, and in particular stocks that are quite junior and don't have much going for them, is significantly high and significantly overvalued. You know, you got to look at the likes of your Teslas and those sort of things, and you can see the insane price rises that have occurred. And while I think Tesla is a fantastic stock, I don't know if it should be valued at its current value. You look at the same for the likes of Zip. I know that one has currently deteriorated quite a bit. Or you look at the likes of Afterpay. These stocks have gone up in an absolutely crazy manner, but they have not fallen in the same manner. But yet when we still look at the overall market, we can see that stock prices in general have continued to increase and increase and increase. So we're effectively due for a correction right now because the increase has been quite significant and has moved faster than ever before. So as a result of this, people are wanting to safeguard their money, and one of the best places to put it in is obviously going to be gold. Now, whilst I do not invest in gold as a literal asset itself, what I do as a stock market investor is invest in gold stocks. So if I were you right now, I would be having a look at some of the junior mining stocks out there that are mining gold, or obviously the established mines that are currently producing gold, because effectively with an increase in the gold price, that means that the amount of money that people are able to get for the gold they dig out of the ground is going to increase. So A, what you're going to see is the producers making more money, and B, you're going to see those juniors being valued at a higher rate as gold price increases. And what you would have seen back in August 2020, if we go back to that, is the gold miners and the gold juniors were at very high levels, and obviously the price of gold declining has resulted in a decline in these stocks as well. So if we're at the bottom now, that means if you're a stock market investor, what you can do is put your money into those gold stocks, obviously ones with good fundamentals, and likely more often than not we're going to see an increase in the value of these stocks. I really think there's going to be a lot of attention on these stocks, but please remember, do your research. This is not financial advice. this is for you guys to stick your ears out, stick your eyes out, have a look and see what's out there from a gold perspective. If you want to buy gold physically, great. If you want to buy gold stocks, also probably a great idea right now, but please remember to do your own research. And that wraps up today's video, guys. I hope you enjoyed it, and if you did, please remember to give the video a thumbs up. It helps me out so much, and subscribe for more of this sort of content. As I mentioned at the start of the video, we talk all things stock market, crypto, wealth management, and investing. So please, if you haven't done already, hit that subscribe button and join us for plenty of more content. I'd also love to know your thoughts in the comments section below on the price of gold and where it's headed. Do you agree we're going into a bull run and we're going into a super cycle where we can see those all-time highs being hit once again for gold? I think so. I'd love to know if you do as well. And with that, guys, I'll wrap up today's video. I hope you have an awesome day. I'll see you next time. Cheers.